I think from a Greece perspective, the issue has been and continues to be, well, it was originally, if Greece has this problem, what does Portugal look like, what does Italy look like, and what does Spain? So it was kind of like, it was almost the example of what could happen, and can the situation be contained? And that was the major question. And throughout that, you saw so much volatility that, of course, dampens confidence. Then it came out that we can contain the situation, that it's a very different situation than Spain's. Spain's issue is the banking system, not all the fiscal infrastructure problems that Greece has and the lack of growth. So two different problems, but it took us time to get there, and throughout that, you dampen the confidence and you dampen the outlook of many companies. And you have to question the ability of the European Union, which is all these various sovereigns in it with different interests, to be able to come up to some agreement. And we still really don't know what that might be. But it took us through a period of a lot of unknowns and economic volatility. And meanwhile, with all of this, you've seen all of their manufacturing numbers pretty much across the board in Europe decline dramatically. So to your point, that confidence, or the lack of confidence, has definitely had, we've seen it in an economic impact. And that was always a bit of a wonder and wait and see approach. So that's Greece. I think the bigger issue now too is Spain. But I think that right now, from what I'm hearing, there's a lot of conversations going on in terms of potentially using the European Rescue Fund. And I tried to bring this up on Market Sense yesterday, but it's very early in the discussions. But this European Rescue Fund being used to be able to directly support the banks. And that could at least backstop some of the potential contagion in their banking system.
So